Before we jump into November's real estate market stats, I want to zoom in for just a minute and touch on what is expected in the new year 2026. What we're expecting is more of a 2019 market. And by that, I don't mean rates and prices. What you can expect to see is an increase in days on market and inventory building, which really is a normal market. Why is this important for you to know? It's important because in the Portland Metro, the Mid-Willamette Valley, and the Vancouver metro market of Washington, you can expect to see homes active on the market longer, buyers to have more selection, and sellers really needing to bring your A game with local expertise to the market in 2026. Why this is also so crucial to know so you can prepare for the 2026 market is because on a national level in 2025, 1 in 7 transactions were either withdrawn and canceled. So being prepared to go to market in 2026 is very important. And it really is going to take that local expertise, having your home come to market in its best possible light, and buyers also knowing what your negotiation power is and how the market plays out so you can make the best decisions for your goals in 2026. Let's dive into what November's real estate market numbers are showing for the Portland metro area so you can kind of see what we're kind of gliding into the new year and what the data has really slowly been showing us as far as what's predicted for 2026. November showed a market where pace slowed, but demand actually remained. New listings dipped slightly from October to 1,437, which is seasonally obviously expected, but inventory continued to climb, reaching 3.8 months, up from 3.1 in October, and it's actually higher than the same time last year. This increase in supply is giving buyers, as I mentioned, more choice and more time to make a decision. Pending sales month over month to 1,628, which tells us that buyers didn't actually disappear. They simply became more intentional. Closed sales came in at 1,520 closed sales, reflecting what I was hinting at earlier of longer decision cycles rather than a weak demand for homes. Pricing tells the clearest story of balance. The median sales price held steady at $535,000, unchanged from October and flat year over year, the same time last year, while the average price softened slightly to just under $600,000 at $599,700. Values are continuing to show that they're stable without the rapid pressure of appreciation. Homes are taking longer to sell, with an average market time now closing out in November of 72 days in the Portland area. The big picture is that Portland is moving in a positive, stable direction. There's nothing drastic happening here, but it is rewarding those buyers and sellers that are making plan decisions and those sellers that are making the time to prepare and get their home ready the right way for this current market. So let's also go down into the Mid-Willamette, the Salem, Oregon area of Polk and Marion County and see what kind of picture is going on there. The Polk and Marion counties are showing the clearest signs of normalization. New listings held steady at 201 listings that were coming to the market, while pending sales declined to 177, and closed sales eased to 171, which is consistent with a slower seasonal rhythm, just like Portland metro area. Despite the slower pace, pricing remained resilient. The median sales price increased to $447,000, and the average price rose to $485,200, signaling continued confidence in long-term value for the Polk and Marion counties. Inventory in the Polk and Marion counties actually climbed significantly to 4.1 months of inventory for the month of November, up from 3.1 months of inventory the month before. And the days on market also climbed to 69 days on market. This is really showing a clear picture for sellers and for buyers that this is a stable market, that this is a market that you can see this gradual recalibration of what we are anticipating that we will continue to see in 2026. So let's go to the Vancouver, Washington area, right up north from the Portland airport across the Columbia River, and see if we are trending for similar stories in that Clark County region. Clark County continues to behave a little differently, and that distinction actually matters. New listings declined modestly from October to 437 listings, while pending sales increased to 498, showing that demand remains active even as supply tightens seasonally. Closed sales dipped slightly to 406, but remain solid relative to last year. What stands out most is pricing. The median sales price jumped to $581,000, and the average price rose to $630,000. Even with inventory climbing to 4.1 months, prices continue to trend upwards. Market time increased modestly to 71 days, reflecting a healthier pace, but not buyer hesitation. Clark County is absorbing inventory, but it is not affecting their prices. We're continuing to see an increase of pricing in that Clark County area. So this is a market which is really showing some strength over the three markets. So it'll be interesting to see how December numbers play out in Clark County and the other areas as we head into the new year. So across all three regions, we're seeing that days on market are pretty standard between those 69 and 71 days on market of inclining. We're seeing pricing stabilize, if not increasing a little bit in that Vancouver metro market. If you're thinking of buying or selling in the new year, really what it's showing is people who take the time to plan strategically and get advice on what your local market is really the defining factor. But let's look at what's on your mind and probably a lot of other people's minds of what are the predictions for 2026 when we scrape away the headlines and take into consideration all the variables of what may or may not happen in the new year. Well, existing home sales in volume are expected to increase 14%, and new home sales are expected to increase 5%. Home prices are expected to increase 4%. And those mortgage rates, what are those mortgage rates going to do? Well, with all the variables at play, it is super hard, but there are some really strong economic indicators that Chief Economist Lawrence Young and real estate guru of 40 years, Brian Buffini, have collected a lot of data. And what we're really expecting to see is that rates are going to hover just below and just above 6%. So no dramatic movements, just a steady market that really can be predicted. And with preparation, you can really make 2026, and you're looking to move, buy, sell, invest, really a planned strategic step for you in 2026. No rush to make a decision now, but if you are curious of what it may take to get your home ready for sale, let's just connect. Let's get a home enhancement list put together for you so you can make that decision of your timing and when it's best to make that move for you in 2026. Happy New Year from Lewis Realtors, from our heart to yours.